Few things in the crazy world of cryptocurrencies have caused as much interest and guesswork as Ripple's recent huge deal with the US Securities and Exchange Commission. Not only does this important deal change the rules for regulating crypto assets, it could also lead to XRP's unheard of price rise. Imagine that XRP, which is worth about 50 cents right now, goes through the roof and ends up worth $9,850. It sounds crazy, but maybe it's not. Let's break down this important event in history and look at what could happen in the unstable crypto market. Since it was founded in 2012, Ripple has become associated with completely changing the way money is transferred around the world. Its digital payment protocol does more than just work with cryptocurrencies. It also makes foreign transactions quick and cheap. Ripple's native token, XRP, is an important part of this environment because it can be used as a bridge currency for transfers between countries. XRP's usefulness in Ripple's business model shows that it could be used in other financial systems and on a larger scale, which leads to the dramatic valuation theory. The SEC sued Ripple in December 2020, saying that XRP was sold as an unregistered investment. This was the start of their fight. The main points of this case were XRP as a digital asset and how Ripple distributed and sold digital assets. The court case brought up important questions, like whether cryptocurrencies should be considered securities and how clear regulatory frameworks should be. Both lawyers and crypto fans were looking forward to the result of this dispute because it could have big effects on the cryptocurrency market as a whole. Surprisingly, Ripple and the SEC came to an agreement that many people saw as a win for Ripple. Reports say that Ripple agreed to follow certain rules and might have to pay a fine as part of the terms, which were kept secret. The deal did, however, confirm that XRP is not a security, which was a big win for Ripple. XRP's market price went through the roof right after this statement, which showed that investors were feeling good and had renewed faith in Ripple's legal standing and operational future. After the settlement, the market reaction was mostly upbeat. The price and volume of XRP went up a lot, which shows that the market agreed to the settling terms. This response shows how important clear regulations are in the crypto world, where investor trust is often tied to how regulators and the law are seen. By looking at how the market reacted to similar events in the past, we can learn about how it might move in the future and the underlying factors that cause it. It seems crazy to think that XRP will hit $9,850, but there is some truth to it. These kinds of predictions depend on a lot of things, like how the market reacts, how technology develops, and how the economy as a whole does. Drawing comparisons with Bitcoin's past rises could help plan this kind of path. To carefully look into this bold statement, you need to know about market psychology, adoption curves, and patterns of investment flow. We'll see if these factors can work together to reach new heights. Different experts in the field have given a range of opinions on Ripple's deal and what it might mean. Some experts are optimistic and think that XRP's image and market cap will grow significantly. Others are more cautious, pointing out that the crypto market is very volatile and hard to predict. These ideas are very important for getting a balanced picture of what might happen in the future after the settlement. The settlement between Ripple and the SEC could be used as a model for future moves by regulators in the cryptocurrency area. It shows how important it is to have clearer rules and stronger compliance systems for crypto assets. How quickly cryptocurrencies become common financial tools could depend on how this deal changes the way laws are made in different places. Ripple has always been adding new features to its system to make it work better and more efficiently. Recent changes, like faster transactions and better security, could boost investor trust and make it easier for more people to use it. For any big price increase to happen, the technology that supports Ripple and its ability to work with current financial systems is very important. A big part of Ripple's value hypothesis is how it might be integrated into global banking systems. XRP's usefulness and market footprint could grow if it forms partnerships with big banks and payment gateways, which would support higher valuation scenarios. Looking into current and possible partnerships will help us understand Ripple's long-term goals and how they might affect the price of XRP. Even though the predictions are positive, there are a number of risks that could stop XRP from reaching unheard-of levels. Ripple may have to deal with problems like new rules, tough competition in the market, and bugs in the technology. It is very important for investors and other parties to understand these risks and how to reduce them. Long-term predictions for Ripple and XRP are based on both hopeful and pessimistic ideas. The deal opens the door for possible bullish trends, but because cryptocurrencies are so volatile, it's important to think carefully about what might happen in the future. Talking about different growth scenarios helps you see all the options and get ready for different market situations. For investors, the Ripple situation has both good and bad things to say. To make a smart trade, you need to know a lot about the market and the rules that govern it. When investors make decisions about what to invest in, they should think about diversification, doing a lot of study, and how to handle risk. The agreement between Ripple and the SEC is a big deal in the world of cryptocurrencies. It not only makes it possible for Ripple to continue doing business, but it could also lead to a huge increase in the value of XRP. It's still unclear whether XRP can hit the high point of $9,850. But this deal sets up interesting possibilities for what might come next in the world of crypto.